going on YouTube? In this video, we're going to go over Alibaba Group Holdings, ticker symbol BABA. They just reported their Q2 24 earnings November 16th, beat on top and bottom lines, and majority of analysts had revised their next quarterly expectations lower. Year to date, Alibaba's down about 16% over the course of 1 year, down about 8%. And in their earnings call, they announced that they are not going to pursue the full spinoff of their cloud intelligence group because of the export uncertainties created by the US and restrictions. And with that, what they are going to focus on doing instead is developing a sustainable growth model based on emerging AI-driven demand for networked and highly scaled cloud computing services. Now, out of their entire earnings call transcript or report, this was, in my eyes, this was the only negative that I could really find digging through everything. Everything else, in my opinion, came out to be very positive, and as we go through the financials, we'll see that there's nothing to dislike there, in my opinion. So at least nothing to warrant for a 10% drawdown on the stock price. So next on the list, we know that they've been doing a share buyback program, and they've got about $13 billion left in their buyback program, which expires, I believe, in March 2025. Associated with that buyback program, in the last about 5 months, they've bought back $3 billion worth of their shares, accounting for 1.3% of the total shares outstanding. And also during the quarter, free cash flow is $6.2 billion, which is fantastic, of an increase of 27%. Very good. Also, they announced an annual dividend for $1 per share. They got about 2.5 billion shares outstanding, so that equates out to be about $2.5 billion, as we can see right here. With that, I think that is potentially another negative catalyst coming out of this company. I I don't see it as being negative, but maybe others do. Others would would rather see them buy back $2.5 billion worth of shares instead of paying out a dividend. I kind of disagree with that. The only reason I say that is because they've got a buyback program already going on, right? They're already buying back shares. So how do they give more value to investors besides just buying back a bunch of shares, which they've obviously still got $13 billion left of that buyback program. So they buyback program, and they're going to hand out another additional $2.5 billion throughout the course of the year of dividends. If they're going to pay out $2.5 billion in annualized dividends, we know that they do $6.2 billion, at least in the last quarter, of cash flow, free cash flow. So you multiply that by 4, and that puts you at about $25 billion in free cash flow. We do know, though, in the trailing 12 months, they've done $27 billion in free cash flow. That gives them a safe dividend. And if they want to, they can just maintain a safe dividend, maybe increase it a little bit year over year, maybe do like 15%, 20% dividend increase year over year or something like that. And then on top of it, they can still continue to issue more share buybacks. So they can give you a dividend and buy back more shares in the process. We know they can afford that because they're doing $27 billion in free cash flow a year. So even if they spend about half of that, $13 billion, $14 billion a year in dividends and share buybacks, that's still roughly $10 billion of share buybacks plus a dividend getting paid out as well. I don't see this as a negative. I see this as potentially drawing in more future investors by offering a dividend. So now dividend investors are also going to be attracted to this company. I see this more as a positive catalyst, not negative, because now you're, again, like I just said, you're going to draw in potential future dividend investors on top of just everyday investors as well. Over to their financial report. Basically, all we're going to really look at is just the growth. I mean, last 6 months, year over year growth on every single one of their segments has grown. The only one that was potentially another maybe potential negative catalyst is that their cloud intelligence group only grew at 3%, but the rest of their business with everything else grew, double digits. I mean, there was one single digit grower, but otherwise the majority of their growth rate was all double digits, and their overall revenue grew like 9% in the last 3 months or 11% in the last 6 months. I mean, I just don't see too many things to dislike right now on this company. Over to the financial spreadsheet on Alibaba. We've got our revenue, gross profit, net income. All three are trending higher. We can see our net income on the right-hand side here is starting to reach that all-time highs. And these all-time highs were back in 2020 and 2021. And if you come over here to the stock chart in 2020 and 2021, we're trading at like $200 to $300 per share in that range. And right now we're trading at $77 per share, making the same amount of net income, roughly, just slightly shy of that. Gross margins, though, sitting at 37.9%. Obviously, margins in 2020 and 21 were slightly better, but we're still producing almost the same amount of net income. We are putting out a little bit more revenue than we were before, though. Net margins, last quarter, 12.4%, trailing 12 months, 14.5%. Revenue, gross profit growth, year-over-year change, we can see we are starting to potentially see some more growth coming back into the company. Return on invested capital sitting at 10.5%, pretty good. Not quite as best we'd like to see. I'd like to see it at least 15%. PE ratio sitting at 11. Cash to short-term debt, they've got more cash than short-term debt, which is very good, and they've almost got enough cash to cover all of their total liabilities. So also very good, strong balance sheet right there. Net income to free cash flow, company produces more free cash flow than net income, but we do have a pretty good chunk of stock-based compensation still getting pumped into the company, and also there is depreciation and amortization getting added in there as well. But overall, we still have positive free cash flow and are in a nice upward trajectory of free cash flow growth. Share count dilution, we are starting to see them buy back more shares. We just talked about that, so we should start to see that decrease over the course of time. Onto the comps, we have two other companies to compare to, JD and PDD. We come down here to our comparison charts, and we can see where Baba is in comparison to the other two competitors. Obviously has a leadership in market cap, but we come over here to revenue, and we can see JD actually produces more revenue than Baba does today. Growth rate on all three companies is decent. There is growth on the board for all three companies. And these are all based in Chinese, so there is hopefully going to be some pretty decent growth over in the Chinese market here soon, which will hopefully bring Alibaba's stock price higher. Over to the margins here, we got gross operating and profit margin. We know Alibaba's done a much better job on margins overall, and we can see PDD does a fantastic job on their margins, and we've done a video on PDD before. I'll drop a link to that video right now. Free cash flow, though, man, that's some very good free cash flow on this company. They can obviously afford to buy back more shares and afford to pay out dividends going forward. Return on invested capital, obviously 10%. We could see if we can get up to PDD's level, about 15-20%, it'd be great. We are trading at the lowest multiple on the board, so it could tell you that Alibaba is cheap today, and an earnings yield on the board in line with the rest of the market. Over to the calculator spreadsheet, and if you guys are interested in the calculator spreadsheet, there will be a link in the description below. Peanut valuation gives them a fair value of $85.62 per share. Our multiples comparison between the two companies we just compared to is $150.70. Manual PE, we take our market cap minus cash, add in debt divided by cash from operations. It'll take this company about 7 years to earn its market cap. Very cheap. Price to book, 5-year average 2.85. We are almost trading at a 1-to-1 price to book ratio, which can tell you that is very undervalued. PEG ratio, trading at basically 1, basically undervalued today, and forward-looking undervalued. Grams valuation, intrinsic value, $181.36. Discounted cash flow, analysts have a growth rate of 19%. I gave them 21%. They historically have done 23% growth rate, which gives them a DCF of $124 per share. Rule 72, we have 3 sources for EPS growth rate for an average of 10%. Goes into 72 7 times. That goes in 10 years, 1.3 times. And we get to have a future EPS of 19, which is a fair value of $95.25 today. Over to the summary, Alibaba currently trading at $77.60. Our fair market value that we just went over on all of our calculators averages out to be $127.38. With a 30% margin of safety is $89.17. So we are currently trading below our 30% margin of safety. Analysts have a price target of $138 per share. So onto the stock chart of Alibaba. We are kind of creating a little bit of a wedge. We were making a sharper wedge, but obviously have broken through the wedge we were making prior and are sitting on support. Honestly, if this thing peaks down to $58 per share, that'd be awesome. I'd love to see this thing roll over, get down to $58 per share, do a double bottom retest, and then just find its way back up to $130 per share. But right now, what it's looking like to me is it's sitting on its support. It could break through. I hope it breaks through, because if it does, I'm going to buy a lot more. But if it doesn't, I'm still interested in buying more next week at this level. And maybe we can start seeing a price appreciation within the company going forward. Obviously, this company has the Chinese-U.S. tensions between it, so it's going to be a little bit difficult for this thing to trade up to a fair market value. I think it's going to be difficult for investors to want to pay a premium for this company, at least in the shorter term. Maybe things will change in the future and this company will start trading at closer to its fair market value. But that is it for Alibaba. If you found value in this video, drop a like, subscribe, comment. We'll be back later with another stock analysis video.